I will admit, up until way more recently, I've had my law firms for about 20 years now. I used to take that wonderful approach of if I just kept throwing the crap against the wall, stuff, I don't even know if it sticks, but I do know that clients end up showing up. And to go from that mindset to, well, if we're actually a little bit more strategic, looking at what's working, who's opening the emails, how all that's actually by percentages, by seeing the data, really makes things so much easier. So you're bringing up something that is so unbelievably important that us slow to figure stuff out just have no clue about.
Well, it's because I work on so many of these campaigns, and I could tell the story of marketing and best practices towards investor acquisition. And that's great, but rubber hits the road. We launch a campaign and we're on the front lines of performance. And some of these rounds work right out of the gate. Others we need to optimize and continue to manage, hopefully to a point of effectiveness. So I need to make meaningful optimizations, pivots to campaigns on a weekly basis, if not more often. So having worked on the hundreds that I mentioned, having 30 plus live at a time, I get to see it all and how these channels produce different results for different campaigns. And it's very important that I'm not just sticking to what worked with us in the past, even if it was last month, and really making contributions towards campaigns that are going to allow them to hit their goal. So that's why I say everything needs to be data-driven. We need the analytics to show us what works. It's hard to pick the winners. It's hard to say, oh, this company, they're for sure going to do $5 million in a month. And I hear the same thing from other service providers, the FINRA-regulated portals, broker-dealers. I know that it's all based on that audience response. But if I could figure out who is responding and who is coming in at the highest levels, I can find similar audiences with these digital tools. And that's what the internet, that's what online channels allow for, is scale. Instead of speaking to everybody one-to-one here, we'll speak to a lot of individuals at once. Instead of a campaign, pitching 100 investors, those 75 versions of the pitch deck that I did, you could pitch 50,000 and look to get 1,000 investors off of it. So that's what it allows for. Once you're able to crack that code, there's far more volume available.
So Sam has a question, but I actually wanted to share something with you that we're doing quite a bit more of. And when I see you in New York, I'm actually going to be presenting to the conference about this, is how we're combining different types of offerings together. Okay. Very specifically running the Reg D 506Cs at the same time as the regulation crowdfunding.
Okay, side by side.
Yep, the side by side. Now all of a sudden you can raise as much money as you want. You're capped at that $5 million of non-accredited investor money. Way easier to just kind of, especially in real estate, to reach that $10-15 million equity raises that really are needed for real estate deals nowadays. Sure. Going to Sam's question, and honestly, I'm asked this nonstop all the time, and I've got my own pointers, but I want to hear what your thoughts are too. If somebody's trying to raise $10 million for a real estate deal, don't care if it's a fund, a apartment complex, a shopping center. Let's just have that goal of like, hey, I'm trying to raise $10 million and the fuse has been lit. I got to close in the next 5 months. Mm-hmm. Realistically, is it possible? And I have comments to that too. Is it possible? And if so, how does somebody tee up for the highest chance, the probability of success?
Sure. It's absolutely possible. I go on a King's Crowd quite a bit, and I look at all the Reg CF campaigns. I look at real estate campaigns on there, and I also am very familiar with Form D issuers, 506C specifically. Can reference our own campaigns or other campaigns in the market, and there are plenty that have hit larger numbers quicker than that. So if it was 5 million on the Reg CF, 5 million on the Reg D, maybe 2 or 3 million is produced from retail investors, and the rest is sold through the 506c filing, depending on how it's set up. 5 months is very doable. Now, I would start with the strategy and build out a full algorithmic roadmap on how you're going to hit those goals before it goes live, because time is the most precious resource here. It could be said for life as a whole, perhaps, but especially on these campaigns, you know your end date. It's staring at you. So you don't want to start testing month 1, month 2, kind of see how it goes. You're looking to raise a substantial amount of money in terms of digital marketing. If you were to launch an e-commerce store tomorrow, to do 5-10 million in sales in that period of time would be outstanding in comparison to industry averages. And on the Reg CF campaign, you're essentially selling stock shares through these offering pages. Now, the big variable is the Reg D, right? Because 25, 50K minimum is common. I've worked on commercial real estate deals that had a 250K minimum. I've worked on real estate Reg D campaigns that had 7-figure investments. You may be able to close it out with one investor, for that matter. So that is the big question: is how is that Reg D going to perform? How much are you actually going to need from the Reg CF audience? Is that really just to make it available for the retail investors? Or are you counting on 1 million, 5 million coming from that? I think you would want to plan for various scenarios. So, if the Reg D is closed out sooner, if it's not really moving, if the Reg CF is producing well, how do you lean into it? How do you scale into it? I'd start with that strategy. I'd look to produce at least, I'd look to produce 5 million from both the Reg CF and Reg D. If you need to, scale one up, produce less from the other, you can't go over 5 with the Reg CF, but if you need to scale the Reg D up, move the Reg CF down, you could. But I'd at least want to know how I'm going to hit those numbers with each. I'd look at the available resources in terms of partners. Who could talk about this campaign? Could I set up 90 companies, 90 individuals to talk about this campaign over 90 days? And every day there's a new social page talking about us with thousands of followers. The larger the follower base, the more engaged, the more loyal, the better. How much traffic can I get from my own network? Because I want to show some validation of the deal. I want to bring my initial audiences there first. I want to be able to show 1 million of 5 million raised on that Reg CF, 2 million of 5 million raised on the Reg D, 3 million of 10 million raised. I want to be able to point at that validation. There's a lot of analogies for this. The one I use the most is the empty restaurant sensation, where you get to a deal, something seems off, no one else is there. Or you see a restaurant with a line around the block. You don't even know what they serve, but you want to try that out. You want to be part of it. So you can convey a similar message and tap into social dynamics on your offering page. You could do it with messaging, but what does it best is being able to show constant movement of that investor count, and how much capital has been raised. If I get to a deal, let's call it a Reg CF, and there's 140K raised. Okay, they're trying to disrupt an industry. I don't know if 140K is going to do it, but their model is interesting. And then I get called to dinner. I forget about it. That's why it's those 7 to 17 touch points. You keep telling yourself you're going to come back, or you can pull different ways. The next time I get to the offering page, there's $212,000 raised. Okay, they've had some movement. Another 60 investors. Wow, okay, people like this. If that keeps occurring, and I'm 300, 500K, $1 million, they've now raised $2 million. Better believe that the likelihood I'm going to invest is much higher. The likelihood I'm telling myself, all right, I missed out on deals in the past. I didn't act quick enough on some of the opportunities. Everyone's got that story of I could have invested in, this company at this level, or, that company at that level, this crypto. I could have bought Bitcoin at $1,000, whatever it is. Everyone's got that story. It starts attaching to that part of your brain where it's more of a situation of, all right, let me just put in my information. Maybe it's a minimum investment. Maybe it's $1,000, a few $1,000, but let me just put something in. Now, we'll see 10 to 30% of investors on Reg CF participate multiple times, especially when the closing occurs. So I'm actually more focused on their total position versus just that first investment. But you want to bring as many people to the pool party as you can before you start telling others to jump in the pool. You want to show some movement, some activity. You want to make it enticing. From there, advertising, and reach out to every publisher I could, every financial publisher, including financial email newsletters. I'd have something new to talk about every week. I already listed a few ideas of speaking at conferences, podcasts, new partnerships, new team additions, new goals hit, new revenue numbers that, for the month, whatever it may be. You want to really just make it painfully clear that there is so much momentum around the organization. So you continue to stack from there. With Reg CF advertising, you're shooting for a 10x return on advertising spend. I have campaigns performing over 20x today. So you're not stuck at that level.
And just so everybody understands, that's basically a cost of 10%, great situation, 5% of the capital that's coming in compared to the amount you're spending to drive that traffic. I just want to be real clear, because that's a question we get all the time.
Exactly. So hopefully you don't need advertising to get you all the way there. But if you spent $200K in advertising and got $2 million in investments, that would be looked at as a good advertising spend. Now, when I say hopefully you don't need advertising to get you all the way there, what would likely occur is peer-to-peer marketing. I invest. I tell my brother, tell my buddy I golf with all the time. I talk about it at the office here, and a few other investors, maybe with the same last name, maybe in the same geographical area, come in. That movement, if you're on a portal, gets featured by those regulated portals to their email list. The King's Crowds of the world, the other groups that talk about investment crowdfunding, start pointing out the deal. Maybe you're getting invitations to speak with organic publishers and get featured, maybe one of those financial email newsletters, especially the ones where the investors pay to receive the content. They reach out and say, we'd like to interview you and feature you to our audience. And 20 to 50% of the investments come from advertising, and the rest is coming from these organic sources. But I would set it up so even if you need to do advertising for most of it, you're positioned to lean into that traffic once you see it working. The Reg D, it's more of lead generation advertising. You're doing outreach, you're running ads to get a lead, process them through investor relations, and likely see a much larger investment depending on your minimum and how much confidence you're able to build on the other side, what percentage of their portfolio they're able to invest, what available capital they have. But you could see some much larger participants on the Reg D. And there's no guarantee that this is all going to work. But at the same time, you want to give your deal, your company, the best shot towards success that you can. So you want to find a good starting budget towards your marketing, towards the resources you're going to deploy, look at the analytics, at the reporting, and then scale as you're seeing performance. And you want to scale aggressively, because that is fighting that time clock. You don't want to let it sit for too long. You're going to keep watching the results. You're going to scale back down if it's not working, but you definitely want to lean into it when you see channels performing. That's what I've seen among the top founders on the top campaigns that we've worked on.
Perfect. Let me, tell you this, and I want to get your expansion, criticism, or ideas on top of it. Kind of what I share with everybody. That is, I'm trying to look for that business to acquire. I'm trying to find that next real estate deal. I don't have it in front of me. The clock hasn't started yet. I don't need an offering today, but I will at some point. And kind of what I share with everybody is you got to be building your investor base now. So when you actually need the money, you already have somebody that you're talking to.
Absolutely.
So, building your email list, getting your CRM organized where you're sending out those newsletters of, here's what I'm doing. Even though I'm not talking about a particular deal, here's what I didn't like about this one. Here's industry information. Here's why I like this sector. Also doing the same thing on social media, just with the continuous posting, reaching out to different groups, to your own networks. But at the end of the day, trying to build that know, like, and trust before you ever even ask for $1.
Absolutely. I want to echo that. It's an excellent example. You have those friends that just call you when they need something. You have those friends that you'd help out anytime because they rarely ever do. And when they do, you could be impactful. Um, there are different marketing philosophies where you give. I think it's a jab, 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 right hook or uppercut. You give, hey, back your campaign, checked out your article. By the way, here's some education on us. You want to build a rapport. That way, when you ask, the relationship's that much deeper. It's that much more developed. And again, the audience is power. It's probably the biggest thing I look at when I speak to a prospective issuer. And I've worked with groups with under 1,000 people in their audience. This isn't to discourage, and I should mention I've worked on campaigns that have celebrities attached with 30 million plus social media followers and seen those campaigns underperform. So there's no one way to do this, but it is powerful if there's an email list of hundreds of thousands. That doesn't happen overnight. I've seen groups backed up on their Reg A to get approvals for over a year. If they were putting together 1,000,
because they didn't engage with us.
That's probably why.
Reason.
And that is a fact. And some of them had to change legal representation. We're not really involved in that process. I wish I had connected you at the time. I don't think we were connected yet. And that period of time, Nate, as you're saying, you can build and build and build and build. If you're able to, add a few new names to your email list a day, that could be 100 extra people per month. That could be over 1,000 over the course of a year. That could make a massive difference. You may get 20 investments off of that the moment you send them an email that your campaign's live. I've seen even more favorable metrics than that. Let's do that at higher scale. Let's say you do a real push around it. Maybe you're running advertising. Maybe you're getting 100 new followers a day, 100 new email addresses a day. Not a lot, but meanwhile, that's 3,000 for the month. That's 36,000 for the year. And I've seen groups do that type of audience building in the course of a couple weeks as well. You have to spend more into it for advertising traffic or have more people talking about you. But 36,000 people, 100,000 people in the period that you're waiting can be extremely favorable to you once you're live.
Do you have any advice for somebody that, hey, I haven't taken the time to organize an email list. I'm really not doing anything. A few thousand people may know me on social media, but that's about it. Like, what are the first steps you'd say, go start doing this today? And then whenever it's deal go time, that's when your services start to kick in.
I would say do it. I would say export your email addresses from your email box. I would say export your LinkedIn list from LinkedIn. You're going to need to enrich the data there, where years back you get everyone's email address. I would look through your phone book. I would look through old yearbooks. I know clients that went back 40 years and were contacting everyone they knew that they could speak to from that from that window of time. The more people you're able to bring to the deal that first day, that first week, that first month, the better your foundation is to raise a lot more. And it's the top deals that keep attracting more, that have that crowd effect around it. So it may take time. Maybe you hire a virtual assistant. Maybe you hire a contractor. Maybe you have someone on your team do it. Intern. I've seen all different types of team members and external groups do this for clients. But start publishing content, start getting it out to them. If you have concerns around it, talk to me, talk to folks in marketing. I can tell you about when I started my podcast, and it took me a few months before I felt comfortable distributing the episodes that I recorded in person. It was end of 2019. I didn't start distributing to April 2020 when we were actually in the pandemic. And it can be confronting at first, but the more you do it, the more comfortable you'll get. The more key points, the more ideas you'll have in terms of what you can engage your audience with. And that is the difference from the top issuers to the groups that have amazing products but just no eyeballs around them. So can't encourage you enough. Do it.